Good afternoon. Best introduction to a forum like this is somebody representing a legacy media. So, uh, you know, good afternoon once again, and welcome to this IBW's afternoon session. We're going to be speaking about stable coins. I am the youngest to learn here, so I'll start from there. So, what I've studied about it's moving from a on-ramp crypto to a highway. Everything from a everyday essential to remittances globally to probably the digital commerce that's going to take place. Stable coins gonna make a huge impact there, and there couldn't have been a better lineup of panelists. We've got a powerhouse panelist here, so we're gonna straight away jump into a very focused and a real conversation with three of our panelists. So, a bit about us. Entrepreneur Media is almost a 50-year-old media house from California, US. We operate in about 13 markets, 13 geographies, with entrepreneur.com, entrepreneur magazines, and a bunch of entrepreneur shows. We are a community of entrepreneurs trying to be futuristic in last many years, and so that's what we are, about 32 million strong community on a monthly basis. So that's about me. My name is Sachin, Marya. Before I jump on to some focused questions I have for three of you, I want three of you to introduce yourself and tell us a little about what's working for stable coins, what's not working, what's in future. So Queenie, why don't you go first?
Hello, thank you for having me today. My name is Queenie, and I'm currently acting as the regional expansion lead for APAC at Tether, working very closely with our college in some of the key markets in the region. So as you already know, Tether is the largest stablecoin issuer of USDT in the world. So currently we have more than 500 million users globally, and the market cap is almost is around 185 billion dollars. Really looking forward to share more about the journey of Tether and USDT today, and also like you mentioned, the use case of USDT is developing more and more nowadays, rather than just being the means of like settlement for crypto trades, but it naturally find more use case across the region. So I was talking to Mudrex CEO today, and we normally see Tether USDT as the water. So it normally come to a country even before we actually come to the country. So it's actually my first time here in India. I have a college here based in India looking for the Indian market, but I guess that USDT is already exists and known among Indian communities. So really excited to be here today and to be in this panel. Thank you.
Thank you, Queenie. Edul, why
Yeah,
don't you
thank
go
you, Sachin.
next? Yeah.
I'm Edul Patel. I'm the co-founder and CEO of Mudrex. We are one of the largest exchanges in India, offer users a wide variety of products to build on. Since the last 2-3 years, we've started working on this product called as Saber, which is a global stablecoin based cross-border remittance and money movement rail. We are licensed in Canada, Australia, UK, Europe, allow people to move funds from all of these geos to India, Philippines, Indonesia, and many more. We think that stablecoins are actually one of the largest innovation that's happened inside of financial services. They fundamentally remove banking from a bank and then can help us offer a wide variety of financial services for much cheaper, much faster, and of course directly to the consumer without going through a wide variety of intermediaries. When we do stablecoin based remittances, let's say to India or to Philippines or to Indonesia, we see the benefits like directly, right? Like the money moves near instantly. It's like almost like doing UPI but across countries. Sure. And at the same time, the costs are significantly cheaper. Like a traditional banking rail would cost you 3 to 5%. Stablecoin based payments are less than 10 basis points or less than 0.1%. So really cheap, really fast. It just works. And I think that's a base to build a lot of financial services on.
Interesting. And you're based in India?
Yes.
Sadiq.
Hi, I'm Sadiq. I'm founder of Lysto, and we are primarily a player experience platform. We enable game developers to understand how their players perform, what is the experience that they go through in the game. And like Edul said, we spun out a crypto entity called the Growth Protocol, which is primarily launching a gaming-focused stablecoin. It's a joint venture between us and Nazara, one of the largest listed companies in gaming companies in India. So the goal here is to launch a stablecoin which is very customized for needs of the gaming industry, whether it is gaming influencers, whether it is gaming developers, pay-ins, payouts, etc. We believe that gaming is inherently global in nature. They're not bound by regional boundaries in some sense, and hence movement of money, like what Edul said, should be seamless within a game, outside the game economy, etc. So that's our goal. We are building the world's first gaming dollar. That's a quick brief about us.
So my team's put a focused question on each of you, but before I jump onto that, Queenie, so I have got a generic one statement that I want from each one of you on three broad topics, right? So one is institutional adoption, second is foreign remittance, and third, most importantly, on regulatory framework across the globe. So Sadiq, we'll go with you first this time, and just an open remark on these 3 points.
Yeah. I think, let me start with the last question first.
No, that's so most important.
Yeah, on the regulatory framework. So before this, I was part of the founding team of Quicksilver, which is one of the largest prepaid platform in Asia. I mean, if you walk into any...
A friend of mine started it, so, but that's another story. Yeah, very smart company.
Yeah. So I mean, you walk into any mall today in India or in Southeast Asia or even in Middle East, you pick up a gift card, then that's most likely powered by Quicksilver. But then the goal there was we were managing money for some of the largest brands, and we used to interact with regulators extremely regularly because it is someone else's money that we manage. So from a stablecoin perspective, I look at it that when Quicksilver was started, the regulatory environment was hazy. People were not sure how to regulate that. We were constantly having discussions with the regulator, and eventually there came what we call as prepaid issuer format now. It's very similar. Like even today, stablecoins are in a stage where there is some regulation and some not. But the good part is US introducing the Genius Act actually accelerated a whole lot of regulatory action across the world, including India. There was hardly any discussions earlier, but now there's already a discussion around a regulatory framework. Okay. So yeah, I'll take the third one first.
Okay.
Yeah, maybe I think I have some commentary on all 3 points, and maybe I can just talk about it from the perspective of India and non-India, because that flavor will help the audience here, right? So let's start off with, I think maybe we can start off with just the institutional usage. What we are seeing in general is US and world over, roughly 1 to 1.5% of all US money movement, what they call as the M2 money supply, is now moving via some format of stablecoins. A lot of that is predominantly institutions to institutions. So institutions are settling with each other in stablecoins, either on private chains or public chains. Financial institutions that are either moving money or are payment gateways are starting to look at stablecoins exceedingly, with a lot of exceeding enthusiasm. And the reasons are common, right? I don't want to go through the reasons again. It's faster, it's cheaper. It always makes sense. So outside India, institutional adoption is growing. Inside India, it's still early. And a part of that is the regulatory piece, which is where now I can come to, where on the regulatory side, outside India, of course, we've got the Genius Act, which has opened up those doors in US. But even prior to the Genius Act, MiCA gave a very clear understanding of how Europe will deal with it. Almost every other jurisdiction that's large, let's say, let it be Singapore, Australia, Canada, most of these places have some format of regulations that either natively solve for stablecoins or allow for it in some way or the other. So regulatory adoption, again, outside India is high. India seems to be warming up to the idea much more now over the last 2-3 months, and primarily from the thought process of, okay, how do you use it to get monies to India and move monies out? I don't think India needs a stablecoin for India. We've got UPI, it's the best payment instrument in the world. A lot of other countries require a local payment system, we don't. So from that lens...
Is it right, there's some work going on right now? There's a close quarter talking about a stable coin in India being in...
So again, let's talk about it this way, right? Like stable coins solve for 3 purposes. They are either a store of value or cross-border money movement or fast local payments. India doesn't need store of value. It doesn't need fast local payments. We've got UPI, we've got FDs, gold, equities, everything for the rest. We definitely do need it for cross-border, which brings me to the third part, which is foreign remittances. Today it seems like close to nearly 1% of all cross-border remittances to India are happening via stablecoins. A lot of that is powered by us and a few other platforms. That's large. But this number in some of the other countries is humongous, like close to 10% of all remittances to Brazil or broadly LATAM happens via stablecoins. Philippines is in the 6 to 8% range and it's growing. And again, the real reason why all of that happens is because individual users lose money when they send monies to their countries. Like, for example, Indians lose $25 billion just to send money back to India. It's ridiculous. Like, it's really ridiculous. So, yeah, stablecoins help.
And so it's very, very essential that, that money, once the remittances, foreign remittances get easier, it is also the everyday use of that money which should be eased out. Otherwise, the whole logic doesn't work. So, Queenie, your remarks on that.
I mean, like, let me share a little bit on the lens of the stablecoin issuer here. So to understand that, let's start with prefacing the stablecoin usage in the emerging markets, which is our target markets. It changed significantly across the geographical region. So of course, it's hard to pinpoint the holdings of the users like to any one country. But based on most of the analysis on the primary use case of stablecoin is almost like to providing the liquidity and also to help with the trade settlement in the crypto markets. It's true for both centralized exchange and DeFi markets. As stablecoin pairs is the most dominant pairs, and also its instruments that have overcome and becoming dominant over the fiat currencies pairs. However, like we have been seeing the fact that since stablecoin was introduced by Tether from 2014, and now there are 2 major points that trigger the adoption of the stablecoin USDT. So the first trigger point is COVID-19 pandemic. It's happening where people cannot go out, interact with the intermediaries, send money cross-border easily, so that they come and look for an alternative that can help them to meet different demands. The second trigger point that we see is actually when regulatory framework comes in. You mentioned about Genius Act, you mentioned about MiCA, different regulatory framework have been developed across the globe recently. So it actually triggered the participant of the institutional players. So last year when I was participating in Money 2020 in Bangkok, there were a lot of cross-border payment companies. They do talk about stablecoin, but not that much. The way they look at it is only in the exploratory phase. However, recently, if you go to Singapore FinTech Festival, if you go to other financial institution event, you will hear a lot of keywords, buzzwords around stablecoin.
Yeah.
It's not because it's people like to talk about it because it's trending words.
Yeah.
People like to talk about it because it really brings the real one use case.
Yes.
And from our point of view, we do see a lot of it happening. I think it's because it's naturally becoming the alternative for the users because it adds a lot of value for them in the supply chain, so that they, like how liquid they are, it measure and how easily it is to integrate with the traditional banking rails, and also in terms of the development of underlying technology.
Yeah.
So it actually creates a lot of playing field for the use case for stablecoins, from remittances to when we mention about cross-border payments, it could be inbound, outbound tourist payment, it could be remittances, it could be trade finance payments for importer exporters. Yeah, and then also it can also becoming the liquidity layer for the tokenization as well, when a lot of financial institutions come in and want to tokenize their real-world asset. However, talking about regulations, right? I think besides usage, the main thing that any one of us here, we really need to pay attention on the rules and regulations when we want to develop our strategies, right? However, we also want to understand where the rules coming from, because most of the rules and regulations are in the developmental phases in most jurisdictions. It means that they are a lot of countries introducing regulatory sandbox license. It means that it can be changed based on how the market reacts with this, how they feel that they can actually adjust it in order to make the use case much more efficient, much better for the users, etc. So I think it plays a very important point here, and as the biggest stablecoin issuer in the world, we pay very much attention on how regulations is being developed in the emerging markets.
Very interesting.
So just if I may add on the regulatory side, I think I second what Queenie said, right? The job of the regulator is really hard. Like here there is a technology asset that's changing very quickly, that can change how monies move, and monies moving is a very critical part of the regulator's job. At the same time, they want to make sure that whatever changes are coming in are aligned with the interests of the country, whatever those interests are. Like for example, for us in India, it's important to make sure that we've got a dominant place in global trade finance. For us, it's important to make sure that monies moving into India are cheaper. For us, it's also important to make sure that monies don't move out of India that easily, and whenever that movement happens, it happens via controlled pathways. So aligning the interests of users of the nation as well as what the technology can potentially offer is a combination that changes from country to country to country. So just because you say that, just because of saying that, okay, US has a regulation and India should adopt the same, that approach will definitely not work.
No, of course. So, but at Singapore FinTech Festival, we were there, and we heard most of the governors really approaching this from a need case rather than from a threat or a challenge. Challenge is there, but I think when you're approaching a problem from a need case, it kind of opens a lot of doors. So I'm gonna stay with Edul for a while. So you specifically spoke about remittance economy, and you're talking about a certain volume change. How is it unfolding in a detailed manner? If you could elaborate, how's remittance working from a foreign?
Got it. So the way we work with is that we work with large global traditional remittance and payments companies. These are licensed entities, financial institutions in themselves, who typically use the SWIFT rail or the banking channels to move funds. Now, the banking channels has two problems. One part is that the banking channel needs to be connected to each endpoint. That means that the number of hops it takes to move money to India takes time. Typically, that time is 3 to 5 days.
5 days. Okay,
3 to 5 days.
Yeah.
Now the way these large companies solve for that problem is that they hold a lot of capital here, which means that now if some company is moving $10 million a day, they need to hold $50 million in reserve in India, and that reserve also needs to account for the currency fluctuations. Like we've literally seen the INR drop from 89 to 89.8 in like 10 days, right? So currency fluctuations and the cost of holding capital are very high for most of the large financial institutions, and that's actually a bulk of the cost. What stablecoins solve for is that they help you move money from one place to the other really quickly. So that's one part. So your cost of holding capital goes down from, let's say, 5 days to 1 day. Now, most financial institutions today don't have the infrastructure or the understanding or the ability or knowledge, or their systems are not built to handle stablecoins like how they are built to handle banking rails and the network over there. So that's where we kind of come in. We provide them that infrastructure. So the settlement that happens through us is actually money is moving in from traditional remittance companies who, instead of using the banking channels, want to start using stablecoins as an alternate pathway, because it really brings down their cost of capital and makes it cheaper. The biggest beneficiary of all of this is actually the end customer, because all the benefits get passed on to the end customer. So for example, a partner of ours who uses our infrastructure versus a partner of ours that uses the traditional rails will typically be able to offer the same pay out at 1 to 1.5% better, which is significant for most people.
I'll give you a live case from a different perspective. We've got some employees in Singapore, and Singapore government has made some serious changes in terms of regulation post-COVID because of various reasons most of us know. So my guys in India, from India, gets salaries later than the same time remittance happening in the Singapore guys, just because we're using a banking facility, which is CIMB, most of you know, which is a digital bank. So sometimes the technology in itself, but I think putting the percentage of exchange and other parameters could probably make life more easier and smarter for us. So, you know, you spoke about Nazara games, and we know changes around, but give us a sense of the gaming infrastructure and how is it evolving.
Yeah, so gaming, there are multiple scenarios here. People who play games, I'll come to that later, but people who make games, right? Today, earlier it used to be that only probably teams based out of US, Europe would build these games, and all the teams were essentially based out of there. Now there are use cases where games are built out of Korea, out of Japan, out of India. And let's take very simple case. As an example, a game being built out of India works with an agency who is based out of, say, Japan, as an example, for promoting their game. And then they have influencers which are, say, based out of Korea, as an example, right? Now, a lot of money movement happens while this game promotion happens, game building happens, design of assets happen, etc. So the goal where we figured out was that even now a large part of stablecoins are actually used by gaming companies, because for them, like what Edul mentioned, the cross-border is extremely important. So in this case, say, right now we can't send out of India, but let's assume we could send it out of India. Say if it was just USD, a USD-backed coin, then all the guys in the chain would either hold on to that USD, or in certain cases where there are local currencies which are stable coin backed, as an example, they could convert that, and the cost for them to get them to actually hold those would be very, very less. And that's our kind of an objective. So from a gaming perspective, the cross-border is the biggest use case. And also primarily not just large institutions in this case. In this case, these are developers, these are designers, these are players, and of course agencies globally. So for us, we see a ripe use case for gaming as an industry. And typically what would happen is, as we move ahead, there will be horizontal players like USDT. And as we go into more, as the industry grows, there will be a lot of vertical players which are either industry focused or even domain focused and
You're
stuff
seeing
like
that play as well?
Yes, yes.
Interesting. Interesting. Queenie, give us a sense of expansion plans from a mid to long term. How are you seeing the markets growing for you?
I think that's the very nice questions. Love to talk about it. So when we started the expansion team, so we always think about the key markets that we want to push more aggressively compared to others. Of course, like I mentioned, USDT exists and present in a lot of countries globally. So right now we have about 516 million users globally. However, there are certain countries that we want to push more aggressively in the region, especially in APAC region. So we have representative in Vietnam, Indonesia, Philippines, Thailand, India, Korea, Japan, Taiwan, Hong Kong, Singapore. Those are countries that we feel like we can really add more value in terms of, it's just not like for the ecosystem development, but also of the regulatory development as well. So like you mentioned, that our key markets are emerging markets because we feel like it's the market that we can really add value, especially for the unbanked and underbanked population. So there are currently 3 billion people that are categorized unbanked and underbanked. They could not generate the equivalent amount of money for the traditional financial system, legacy system, to serve them more efficiently. So that's why we can come in and help to add value to them in many use cases that you have, other panelists have been mentioning. So normally when we enter into country, we love to build more relationship with the local partners because we feel like it's, we cannot achieve what we have today without our local partners.
Yeah, makes sense.
So we want to build more relationship. We want to establish and drive more use case in the local markets. And what types of partners I'm talking here about here? So first, we want to actively involve in any stablecoin regulation discussion to make sure that we can contribute our expertise, our experience in order to develop the stablecoin regulations that is feasible for all of the players in the market. Second type of partners, definitely financial institution. It could be banks, non-banks financial institution, fintech companies, cross-border payment companies. It really depends on the market needs as well. So we try to talk to them and see how USDT can support them in terms of their business operation and businesses. So the third type of partners, definitely what we call blockchain and crypto native companies. It could be an exchange, could be wallet, could be on-ramp service providers, payment service providers as well. And we want to like promote more integration, not with USDT, but also other Tether products as well. For example, the commodity related finance, like we've been working with Mudrex here, and also other like products, other tools for the developers that we have been spending our resources in order to make sure that we are able to provide the toolkits needed for the whole ecosystem in order to thrive. For example, we have the wallet development toolkits. It's completely free, free open source that allow any players can deploy the non-custodial wallet. We have the Hadron, it is the tokenization and management platform. We have peer-to-peer technologies that help anyone that can deploy the fully peer-to-peer apps. We also put a lot of efforts in educations and AI as well. So those are the expansion plans. Of course, I would like to highlight again that it's really depend on the regulatory framework of each jurisdiction that we enter in, because we want to make sure that we fully compliant with the particular jurisdiction that our products are used.
Great. So that's interesting. So, you know, we are a bit short on time, but two important questions from Sadiq and Edul. So we are a global powerhouse when it comes to talent, right? And last 4 to 5 years, 3.5 years at Entrepreneur, we've been trying to sort of do something in the Web3 ecosystem within India. But we've always seen this kind of a wave going on. I was talking to Tech last evening, and he was also sharing that, you know, there's been always unpredictable situations coming in. What's your take on India being a W3 powerhouse, given the talent? Edul, you go with it. I have another one for him because I've got limited time.
Sure.
Sorry for this.
So wide variety of estimates exist out there, and all of them put India as by far the #1 developer ecosystem for crypto.
Sure.
It's roughly around 15% of all developers in Web3 world over are Indian folks. Indians are involved in almost every single large project that's out there, and they are involved across the board, not only as devs, but as marketing folks, as production, as distribution, at business development, at all of those layers. So I definitely see the talent being available and the talent actually going out and working and deploying their talents in these large companies as well, executing at scale. It's really unfortunate that the regulations are really not there to support that growth yet, but I don't see any reason why the rate of this talent growth will not happen. We are by far the largest English-speaking demographic that's tech-friendly, tech-enabled, and is willing to participate globally. And all of those things work in our favor. And that's what helps. And as a result, I think this will grow. Bitcoin prices keep on going up and down. The number of developers only keep on going up, is what we've seen historically.
Sure. Very quickly, Sadiq, how's your company helping us to sort of play a critical role in the stablecoin space? So that's the final one. We run out of time, but you go for it. Huh?
Yeah. All these innovation happens in waves, right? So there was a horizontal wave, like what Queenie said, from a horizontal generic stable coins, right? Our goal is to verticalize it, which means to go deeper into a particular industry and make it widely acceptable, widely usable, and that's pretty much what our goal is. And I do see that there are these vertical industries that will come up, like I heard someone building it for the shipping industry, someone building it purely from a banking standpoint, etc. So that's probably the next wave that's
very
going
interesting.
to.
That's remarkable closing point. So I don't know if organizers still we have time for a Q&A, or should we wrap it up? We don't. He says no. Thank you, wonderful panel. A round of applause for all of them, and great having you guys with us.
Thank you.
Thank you.